Welcome, everyone. Brand deals can take many different forms. They may include sponsored posts where a creator is paid to feature a product or a service, affiliate partnerships, earning a commission each time someone makes a purchase through their unique link. In other cases, brand provides free products through product seeding or gifting instead of direct payments. These are also longer term ambassadorships in which the creator partners with the brand over an extended period of time. Some creators are hired to produce user generated content and that the brand uses on its own platforms without the creator posting it themselves. In addition, the brands may pay to license a creator's content for use in their advertising campaigns. So all of these, we're just talking about brand deals. At its core, all of these arrangements have one thing in common. You're being compensated or receiving something of value because of your audience and the influence you have already built. So this is where we come in. Talk about brand deals. Are they taxable for content creators? So, like I said, those brand deals that you already heard me saying. So, if you receive anything of value, it is taxable income. For example, cash payment, free products, trips, free trips, gift cards, affiliate commissions. Those are all brand deals. For example, you got paid for 2000 post tax. That is cash. You received $500 skincare kit is a brand deal. Affiliate commission, taxable, and a free vacation to Hawaii for your content. You're filming at the seashore. That trip, whatever money that come up is free to you, is taxable income. Creator must know because you're a creator. Now I said, oh man, everything, even the air you breathe is gonna pay taxes. So I want you to know the following, not the air you breathe, that's free, unless something invented by Elon Musk and we can just charge for every breath we take. So we'll send more satellite to the sky. But anyway, so we do want to know what are the things in our hand you receive as a content creator that you need to know what to do with it. And you are a business, even though you didn't know. You are a content creator, you have a business, you are a business, so you must know that. If you start earning from ads, sponsors, affiliates, or digital products, you are often a sole proprietor by default. You started just naturally. Sole proprietor doesn't mean that you are not a business. It is just a simplest business structure you have. It is coming from natural progression. You were doing it as a hobby, you love it. Then suddenly you felt like you were in trouble because you made a lot of money and you are a sole proprietor. Suddenly someone says you're a business person. You're like, no, I'm an artist. But an artist can be a business person as well. The simplest tax structures still require you to build good habit, right? Separate bank account from your personal bank account, tracking all your expenses, and the saving portion for your taxes. So all of that, before you change your business from the simplest structure to something that's tax favorable, then you have to have this good habit. Tax structure change should serve a purpose and be meaningful. Don't just because incorporations sound better than LLC, so you change. No, you want to change with a reason. So this is where we want to bring to the core to you. You must know you are a business. You have to change your structure when you start making money. Not all the income comes on 1099. That you also need to know. Some of the income you did not remember but the 1099 actually was sent to IRS. It just a copy of it didn't come to you. So you cannot assume if you don't have 1099, you don't have that income. So you really should be the one that responsible for documenting everything that you receive. You should not pay taxes all at once when you are going in to file taxes. That's not a good way to do it. You want to split your tax payment by quarters. That's what IRS require you to do. And you also should not pay taxes on all of your income because you are a business. So you're entitled deduction, business deductions. So those deductions, to name a few, and you have equipment like your camera, your lighting, your phone, your editing software, your home office internet, travel, makeup, wardrobes that for your marketing cost, all of these are legit business expense that you need to reduce your income before you calculate taxes. Free products are also income. Shocking, right? When we say that. And if you get a free product package, the fair market value must be included in your income. And you can sometimes offset with your business expense, but you must recognize that $500 skincare kit to be your income. Big audit stories, which I want to tell you, that will impress you about free product or income. Drag Queen is one of our clients, and you can imagine what they do. They actually will put out comedy short. So they go to a retail store and do something there to advertise that store, or they would go somewhere and showing off their clothes. The brand of that clothes is showing off, right? So that's what they are doing. So this business was actually get audited by IRS. So IRS came in to audit about 4 things. The 4 things they were asking are as following. Number one, IRS looked at hobby loss rules. The IRS has strict hobby loss rules. If an artist or performer runs their business at a continuous losses without showing a profit, the IRS may classify that as a hobby, disallow that deduction. So IRS came in, wanted to see, has the business income. So having business income with all the deductions, it's become a loss. That is not a problem. The problem is that if you just have expenses, you don't have any business income, that really to IRS, that's a hobby loss rule and they won't let you to deduct that. Then of course, IRS also looked at business versus personal expenses. So the auditor wanted our client to show the auditor of all of their receipt for their selected period. So they selected 3 years, and one of the expenditures we couldn't find back up. So we actually went to the retail store, give them the day, the time, the amount, so have the retail store print out the receipt. So you would need to identify what they are. If you go to buy something in Costco, you can't just show up on the credit card as a total. The IRS wanted us to prove what's in the total. So once they see the receipt, they can say, oh, costume, oh, paper, things are more related to business, they will be okay. But what if Drag Queen has hot dogs, chocolate bars in their receipt? Maybe IRS would deny that. But in our case, the IRS went 3 years expenses, business and personal expense, but they focused few receipts, but majority of the focus is on mileage. So because Drag Queen drives a car, so he document where he goes and how much mileage. So every year there was over $15,000 worth of deductions just on the mileage. So IRS wanted every item related to the mileage, and our client has everything. Our client has the purpose of the trip, beginning of the trip location, the address, then ending address, and the total mileage, and also the date. So it's like the 5 basic element for mileage claim they had it all. They are our clients, so we have always told them to do that. Then IRS also audited for self-employment tax to see whether drag queen paid self-employment tax, which we are the one did tax return. So of course we did. So that is how it's supposed to be calculated. However, we do run into a problem with a free product from the costume makers. So the costume makers are actually supplying them with the costume. So they use it one or two times after filming, they return it back. So there were total of 560,000 in value, and the costumes were still in their possession at the time they were being audited. So during the audit, and we understand that some of the costume are needed to be returned. So with that said, we pull out the 560,000. Majority of them went back, but there were 150,000 worth of clothes. Client want to keep it. So that is something is not required to be returned. They want to keep it. So that 150,000 was assessed taxes and also assessed penalty because not all of them from 1 year. There were 3-year audit. So majority of them are coming from the last year. So there was a little piece of the clothes actually charged more penalty just because the time is longer. They kept it, they kept it with them, did not report that income. A free product are income. And drag queen has to report that. So they did. After getting audited, they learned big lesson. So next time when they get costume shipped over, they make sure it's shipped back to the place because they didn't keep it. It is not free product to them. The other important things is multi-state revenue reporting. This is a big headache for content creators on internet. The reason is you are creating content on this boundaryless audience group. It could coming from any of the states in the country or even from other country, right? So the multi-state revenue reporting become a big deal because if you are not careful, if you receive money from different state and you are not reporting it properly, huge problem for you. Drag queen lives in Illinois. All of his income is taxed under Illinois state. But for business income, that many states now uses what they call the market-based sourcing. So the receipts are assigned where the customer received the benefit or where the customer is located. So rather than where the creator performing the work and they're using this market-based sourcing. So, relying on this part of income is from California because California clients are buying the costumes. So that's what related to drag queen because they actually, even though they do all of the works in Illinois, but, New York City and also California are the two big customers they have concentrated. They don't live in California. They don't live in New York. So the non-resident filing threshold is a thing. You have to know whether you reach that threshold, you need to file California non-residence tax return for California earning. And you need to file New York form IT 203 to report your non-residence income earning as a non-resident in New York. Drag queen gonna report all the income in Illinois. So what happened is, in our case, in one of the year, drag queen actually sold 250,000 in California. Costume purchased by customer in California, 250,000. 15,000 from New York. What is drag queen is going to do? He actually need to do a federal tax return for the $265,000 total. So federal tax return reports everything, right? So he will do that. Then he'll file Illinois 1040 for that full amount. He'll report 265,000 because he created everything. He works in Illinois. He's a resident of Illinois. But of course, Illinois, when he filed Illinois taxes, Illinois will give credit for California and New York taxes on this income. So Illinois not going to say that, well, I'm just going to tax you twice. You're going to pay taxes for Illinois, then you're going to go to California, pay California tax, and go to New York, pay New York tax. No, the drag queen will go to California, file 540 non-residence return, and report that income under Schedule CA, and then do another tax return for New York, non-residents, report the $15,000 in New York. All of the taxes as a non-resident drag queen is paying to California, to New York, you'll bring that back into Illinois. So you will get that credit back when you report Illinois income, because those income were not really sold to the market base in Illinois, right? Because they are sold to California, they're sold to New York. I only want to bring you this kind of understanding is to tell you that the water is deep. If you get into a situation like that, you really need professional help. This is not something tax filing 101 and or HR block. It will easily just resolve that for you. When you do these kind of taxes, you know what your tax preparer would do? They would immediately ask you, do you have a good accounting to know where the income coming from? If you say, nah, I don't know where they come from. They're from everywhere. I don't know. That just means that you need a good bookkeeping first. If you don't do that, you're going to make the other state to fight your income. And imagine states don't have limitations. At the federal level, it's a 3-year statutory limitation. Right now, if they audit you in 2026, they can only do 25, 24, and 2023. But if you owe money to the state, there's no limitation. They can go for 10 years if they want. So you really don't want to do anything wrong with the state. And in California and New York, they are notoriously aggressive on auditing you because they know that they are other income taxable state, just like Illinois. If you happen to do business in Florida or you live in Florida and you're trying to get away from income taxes, they will make sure that they audit you, make sure you qualify to claim the state as your residential state. So these are more complex on the multi-state side. Of course, you are on internet selling and you cannot guarantee you don't make money from foreign sources. So if you are a U.S. citizen or residence alien, which are not a citizen of U.S., they may be holding green card, they may be aliens allowed to work and whatever. So, but most of the content creators, if you are a U.S. citizen or you have work permit or permanent residence status in U.S., you are taxed by U.S. government on worldwide income. It doesn't really matter where you make your money. You can be getting money from Canada, but you still have to report your money in US. If foreign income tax are paid, then the foreign tax credit will come into play. A little bit like the state, right? If California, New York, you pay taxes, then Illinois give you a credit. Same thing. If you paid taxes to the other country, then you will have a tax credit to calculate. Then 2 more forms you need to know. If you have foreign source income, you probably have bank account in foreign country. Then you need to file Form 114. That one is due with your tax return every year. Like I wrote on my slide, there is a long, accurate, wordy, legal, regulatory definition about who should file Form 114, but my own interpretation, easier for you to understand, this form is required if you has a foreign bank account over $10,000 account balance at any given time during the year. You may say that, my account already closed, but I have 10,000 balance back in January 3rd last year. Do I need FinCEN Form 114? Absolutely you do, because you had it and it was over 10,000. The Form 8938 is another one required. Form 8938 required with 1040 return as well is for asset over 50,000 for a U.S. person. So what is asset? Maybe you were making so much money in Japan and you open up stock trading account and that has $50,000 in there. That's your asset. So you need to fill up form 8938. You see how this foreign source income reporting, it is a requirement. And don't think that, oh, it doesn't really matter. Nobody knows. No, the government knows because these money you make, and if you ever want money to come back to you, that is where they will look at all of the reporting you had before. So you will not get away if you don't report that properly. I went to ask our client drag and drag queen to give some advice to you. So here is what he said. He wanted you to always do data match and know all the 1099 income in IRS system. I know I didn't mention about that in this webinar, but we do have videos talk about data match. So what we do is we actually inquiry to IRS system to pull out all your 1099 income that the company provided to IRS. Sometimes they give you a copy, but there are also times our content creator don't get a copy, but it showed up by the IRS. So we actually go in to take all of these data to make sure you reported everything. So that's what Drag Queen has been doing, all these years with us because we knew sometimes the people he dealt with may not be sophisticated enough to know how to file things. We just want to make sure that there's nothing we missed, from what IRS knows. That's advice number one. Advice number two is to keep a separate bank account and a credit card for business income and expenses. I at one time literally saw him in the line and doing two checkout, just himself, one for the business, one for his personal. That is such good business habit. So you want to keep the account separate. When your deals come through, have them deposit into your business bank account. Don't let them deposit to your personal account. Number three, engage professionals to help track income sources because we book on his accounting system of what he is going to get. So if we don't see that amount get cashed in, then we know something is wrong. So we always track the income really timely for him. There was one time, and he had this contract pays him about $3,500 a month. So one of the months it's paid on the first, and normally should pay on the 15th based on the contract. But there was just one month, somehow it paid on the first. Then on the 15th, it didn't come in, but on the 30th, it came in again. So when we work on the financial statement, and we know that there's two payments in one month, but really should be one payment in 15. So we went to ask what's going on. So when we checked with him and realized that the contract got updated, but he never got updated version. So that's why he didn't send to us. So with that said, and we did not lose the opportunity to make sure that the contract is in place. What if they don't give him a contract next month, they cancel the deal, then he doesn't even have anything to show that he's supposed to get that amount. The last advice Drag Queen give to you is always put away funds for tax payment. Tax refund are the happiest money in my pocket. That's what he said. He likes refund. Every time he gets refund, he'll do something special for himself. His experience is that because we do financial statements, so we actually know how much money, how much profit he get at the end of the month. So we take the profit and we also know his other situation in his personal life. So we actually calculating 21% of the total profit to put aside for both federal and Illinois taxes. So we actually pay taxes for him ahead of time. So at the end of the year, when we file taxes, it was totally not stressful. So he gave you these 4 advices. Save your happy world. So you can stay happy, continue to create. All right. So this is our website, communitycpa.com. And you notice that we have this on board with us button. If you click that button, and you will sign up with us 24/7 whenever you have time through this button. Then we will get back to you and get you connected with the right team member to help you out. So we have 6 partners, 2 managers listed on our website. 6 partners, we're all in different area of practice. So Dr. Howe and one of the partner, and he is legal compliance and the immigration side of work. And Dan Kim, another partner, he's in charge of client service of market development. Juan, specialty in payroll accounting, sales tax. Song, he is our attest partner, handles audit. And Derek is our IT network architecture and IT partner. Tiffany is our tax manager. Eileen is our accounting and audit manager. And this is YouTube channel. We always deposit all of our webinars into here. And I hope that you will subscribe to our channel so you always get notified what we have for you next. And also, if you like our video, give a thumb up. Last, no responsibility disclaimer. Of course, all our webinars are for educational purposes, and it is not the tax, legal, accounting advice, because those advice need to give to you customized. We need to know who you are before we can finalize what is the advice. And be sure to review any decision with your CPA, your attorney, your tax advisor, or with community CPA before you put that in action. All right, I'll talk to you again, content creators.